Let's talk about riders, in particular disability riders. Riders add a benefit of some kind to life insurance policies. Probably one of the most popular and most often used riders in the industry is waiver of premium. Simply check the box on the application, include it in your illustration because there is a small cost to it, but it can really be of a huge benefit to an insured. So let's talk about it. What happens with waiver of premium? You, the insured, become sick or injured, disabled, you cannot work. How are you going to keep your policy in force because you don't have any income coming in? Well, with waiver of premium, that would help you. So the premiums are waived by the insurance company if the insured becomes totally disabled. Of course, there would have to be proof provided by a doctor that indeed you are totally disabled. So at that event, right after that event, you would be notifying the insurance company. They would, talk with your doctor, get proof that yes, indeed, you are disabled. And then from the date of the event that caused the disability, whether it's an accident or sickness, then there is a 6-month waiting period. You do have to pay any premium that might come due during those 6 months. But once you get through the 6-month waiting period and you prove that you are still disabled, then they will retroactively move the benefits to the very beginning, the event, and any premiums that you paid during that period would be reimbursed to you by the insurance company, and they will then continue to make your premium payments on your behalf as long as you are totally disabled. So a very good feature, and for some people it's the only way that they can keep their policy in force because of a disability. There are additional disability riders very specific to certain products. For example, there is something called waiver of cost of insurance. That is a disability income rider, but it is only used on universal life policies or interest-sensitive whole life. Remember, that's the same product. They just have 2 different names. So it waives the cost of insurance and other expenses. On the regular waiver of premium, it waives the entire premium, even the amount of money that goes into the cash value to grow the policy. But on the universal policies, it only waives the cost of the death benefit coverage, if you will. So it's the waiver of the cost of insurance and then the expenses. Doesn't waive the premiums necessary to accumulate cash value. So you would still have to put in the monies for the excess that goes into the cash values to grow the cash value over time. So it's slightly different. And remember, those universal policies are different. They have a little bit of flexibility to them. So they created this rider specifically to kind of match up, if you will, with the universal policies. There is a waiver of monthly deductions. This is a special disability rider as well. And it applies only on universal life and or variable universal. Remember, variable universal is simply a hybrid of a variable policy and a universal. So it's got some features of each. So it has its own special waiver of monthly deductions, has the same 6-month waiting period like the other waivers do, pays the deduction, but not the full premium. And again, just remember it applies to only either universal life or variable universal life. There is a pay or benefit rider. Very specific, only applies to one kind of policy, and that's on a juvenile policy. If you as a parent or even grandparent take out a life insurance policy on a juvenile, on a small child, of course the child is not making the premium payments. You are. The adult is. What if the adult becomes disabled and can't make the premium payments on the child's policy? The adult who makes the payments is called the payor. So on a juvenile policy, you could put a payor rider and it would come into effect if the payor, the premium payer on the juvenile policy, is disabled and cannot make the premium payments. It would then take over or waive the premiums. The insurance company would waive the premiums because of the disability of the premium payer. It only applies to juvenile policies. disability income rider. This, in essence, is purchasing a disability income policy. What a disability income policy is, it's actually a form of health insurance, and you would take out a disability income policy to replace your lost income should you become sick or hurt, disabled, and unable to go to work. It replaces your lost income. You can actually attach it as a rider to a life insurance policy. It's a fairly expensive rider to use, but it is there if you want it. It waives the policy premiums if you are disabled, and it's going to pay you a monthly wage to make up for some of your lost income because you are no longer able to work because you're fully disabled. Now, how do they determine how they're going to pay out what kind of a benefit? When you do this as a rider, when you do a disability income policy as a rider on a life insurance policy, it's based on a percentage of the death benefit. For example, let's say you have a $100,000 death benefit and you have a 20% payout on this disability income rider on your life insurance and you become disabled. 20% of $100,000 is $20,000. That would be the maximum benefit they would pay out to you in lost wages over a period of time, monthly payments until they reach the $20,000 amount. If you're still disabled after that, that rider would no longer pay because it had contractually paid out what they were obligated to pay. So remember, when you have a disability income policy as a rider on your life insurance policy, it's going to be based on a percentage of the face amount or death benefit of the policy.